All right, I'd like to introduce our panelists. So William Mugayar. Round of applause, everyone. Let's keep the clapping going. Jalak Jubanputra. And Joel Monegro. Yep. Oh, do you need help? Oh. My lady. Yes. And Joel Monegro. Yeah. Great. And Brock Pierce, although Brock Pierce is running late, or he's here and doesn't know about this. But hopefully he is running to get here. So, okay, well, we are going to try and make this the most exciting panel you've ever seen, so get ready. And I don't know, it's about tokens. Tokens are very hot right now, so as we are all very well aware. So yeah, let's get started with introductions, and then lastly I'll introduce myself, and then we'll get started. So William, why don't you go first?
Yeah, you saw me this morning. I'm William Mugayar. I'm the author of The Business Blockchain, and I'm organizing the Token Summit on next week, Thursday. If you don't have a ticket, please don't come because we're oversold.
Hi, I'm Jalak Jubanputra, founder of Future Perfect Ventures, which was one of the first investors in the blockchain, what is now the blockchain space. Launched the fund in 2013. And I've been a VC since '99 and was a tech and telecom banker before that. So really looking at what we're seeing in the evolution of the blockchain space as how it relates to how we saw the internet develop.
Hi everyone, my name is Joel Monegro. I was Union Square Ventures blockchain analyst from 2014 until the spring of this year. There, I mostly focused on leading the firm's thesis development around blockchains, which led us to the thesis around tokens and a thesis we called fat protocols. Since then, I've been completely enamored with what's going on with tokens after coming to understand it after several years of research, and now I'm going to be focusing on
More mic.
them all the time.
So let's make sure as well, just you got to yell into this mic because this room is crazy loud. Awesome. So, okay, let's begin with, now that we've done introductions. So, first thing, and I'm sure the audience is wondering, what the hell is a token? The idea of a token is ranges from a lot of different things in our minds, and I think, let's explain it from a high level and see if we can get everyone to understand just the core concepts. And I'm thinking, William, maybe you want to take a shot?
Take a shot. It has multiple definitions. It's a new form of currency that is fueling the blockchain economy for the next 10 years. And it's a currency that has a utility. It is not just an ownership of some sort, but it also is something that we can earn by doing work or by having a right about something or something that we own. So it's a multi-purpose type of new currency that is it could be part of an application, of a software application.
Yeah, and I think, when we think about tokens, there is a lot we can do with them. At its core, it's an account and a number in an Ethereum database that we call the blockchain. And that may not mean a lot to everyone in the audience, but if we think about every account you've ever held in every bank and in any sort of financial institution anywhere, or any institution for that matter, it follows roughly the same kind of philosophical idea with an account and a balance of some kind. So these tokens can represent anything. And whether it be certain financial assets to membership to anything, discounts, products, and I think as we're seeing from the space right now and the way the prices are going, the usefulness and the utility of these things is growing at a rapid rate. And so to get to the next thing, I wanted to ask all the panelists, what are you most excited about in the token space right now? What keeps you up at night? What is the dream of everything in tokens? How can people in the audience get involved with it? I think we'll start with Joel and we'll just go to each person because I think I want to know.
Thank you. So my personal fascination with tokens comes from understanding the flaws that traditional equity has when it comes to the way information networks work. And basically, at a high level, a share of stock in a company typically means, or definitely means, a proportional right to the profits of a business. And so if you own 10% of the stock in a company, you have a right to 10% of the profits of the company. And so what that means is that equity, or a share of stock as an incentive device, drives the holders to increase profits, because inevitably the value, the financial value of a share of stock is tied to the profits of a company. The problem is that when companies are driven to increase profitability, they end up creating market failures, because they either expand too broadly or vertically into new business areas and make it difficult for startups to compete or amass monopoly power. And then the other problem with equity is that it incentivizes the holders of the equity to hold as much of it as possible and concentrate the value of the equity, because it represents a perpetual right to profits. With tokens, you kind of invert those incentives, where a token has financial value when the network or service that it represents is being used in an increasing amount. And so what that means is that now as a holder, you're not incentivized to get a company to increase profits, but rather you're incentivized to get as many people as possible using the service, as opposed to extracting profits from the service. And that, I think, leads to a whole bunch of different interesting areas, such as, for example, you are able to distribute value more broadly than you can do with equity, given that you have an incentive to distribute the tokens, because if you distribute them, then they circulate, and if they circulate, then people are using them, as opposed to one to concentrate. And I think that's going to spread the value of information networks more broadly than equity ever did.
Yeah, so I'm so excited by what's happening with our token economy. And oh, here's Brock. We knew you were going to show up at some point.
Fashionably late.
All right.
Brock Pierce. So there are two elements that I'm most excited about here. One is participation, and the other is access. As Joel mentioned, we've had the system of capitalism and company ownership in place for a while. And what I see happening is really capitalism 2.0, and it's not going to look anything like what we've seen before, because for the first time, we can truly allow people who are creating value to participate in that value. And they're incentivized to create even more value by participation. So that is something that is so different from limiting access. I mean, we're now getting to the point of opening up access. And so I think we're going to see better companies emerge. We're going to see a better world emerge, and it sounds very, Pollyanna, but that's been a key missing ingredient of just, having one profit mechanism in place, not allowing people on the ground, around the world to participate in ownership. And one example, this comes from one of my portfolio companies, Abra, which launched a couple years ago, and their goal was to provide a global remittance network, making the Bitcoin blockchain, which they had built upon, invisible to the end user. So they were just going to create lower cost remittances and get tellers on the network to be able to allow cash out on the ground. But what they found was that there was such a demand for people in these markets, such as the Philippines, in India, to actually own Bitcoin and hold it. And it's because there's so much pent-up demand of being able to hold assets and participate in an economy. We heard Elizabeth earlier, also another portfolio company, talking about BitPesa and the fact that, I was born in Nairobi. If there's a trading, Nairobi was a huge port in the global economy, and people want to be able to participate. And so we're coming back to a world that used to exist and opening it up in a bigger way for a greater swath of the population.
So for context, there are about 900 tokens today, year to date. And by the end of this year, probably there might be another 1,000 that get created. So I'm not getting excited anymore about new tokens, but I do get excited when I hear about a new business model that is enabled by the tokens that are being created. So what's the most exciting to me is that the tokens are being married to work, and they are going to play a big role in the future of work in the following sense. If you think about it, we all have 3 jobs today. We have the job that we get paid for, that you go to the office to get a paycheck. The second job is taking care of yourself or your family and doing the dishes, cleaning the house. And the third job is a job that was given to us by another company, whether it's booking an airline or renting a car. All kinds of jobs are being given to us, but we're not getting compensated by those kinds of tasks. However, in the future, more and more, the work that we will be doing, whether it's passive or active, is going to get compensated by a token of some sort. So in the same way that governments today are the ones that are issuing money, companies in the future are going to be issuing currency in the form of tokens to marry that to a function that they have in their product and in their specific offering. So what I'm really excited about now is trying to expect that there will be new companies that are traditional companies that will be creating and announcing tokens. So far, it has been mostly startups and companies that didn't exist before that are creating these tokens. But next week, again, at the Token Summit, there is going to be a big announcement of a company that is traditional, that you wouldn't think of maybe announcing tokens as part of their product. And they have millions of users. So watch out for companies that are traditional that are going to be also adding tokens to their offering as well.
And just to fill Brock in, so we're talking about what we're most excited about in the token space. So give us the Brock Pierce. What is going on in your mind? What is the most exciting thing possible with tokens right now?
What's a token?
We did that. We did that.
From what I heard, I'd agree with everything that I've heard thus far. So rather than repeating those points, I'll try and touch on something a little different. My firm, Blockchain Capital, did an ICO recently that was different than everything we've seen, in the sense that we've incorporated or issued the token out of Singapore, where there's financial guidance from the MAS that it's not a security, but understanding that the US could take a different view. We married that jurisdiction's financial regulatory guidance with some of the Jobs Act or crowdfunding laws that have occurred here in the US, and acknowledging that we're a security and utilizing Regulation S and Regulation D exemptions because we're a fund. It's not a use token, and we don't think would pass the Howey test. And so we tried to do something different. So we were the first ICO of what could be, or we're at least preparing ourselves from the US's perspective of being a security. It was the first token where we did KYC. And in so doing, we created a digital liquid venture fund. I think that's going to be very exciting to the long term of venture capital, but I think it's going to have huge implications on private equity and real estate and other illiquid assets. Think about venture capital. It's an industry that's benefited greatly from technology and the internet, but how has it innovated in the last 50 years? Other than Tim Draper and DFJ doing kind of a franchising model or something, there hasn't really been any innovation on the the VC side of things. And me being the meddler that I am, I can't help but try to mess up the industry that I'm working on if I see a way to do it better. And what we were able to do is a couple of major changes. It's the democratization of venture capital in the sense that historically it's something that's only been available to the financial elite, pensions, endowments, high net worth family offices. And in the same way that crowdfunding moved us forward in the democratization of venture, we think this is the next major leap. We had about 1,000 LPs, come in. Other than on the U.S. side, we were limited to accredited U.S. investors only, and 99 because of mutual fund laws. But I think that's very exciting, and I think it will change everything, and it's completely liquid. One of the problems is that venture capital historically has delivered fairly good returns, but being locked up for 5 to 10 years doesn't appeal to most people. So we think that's very exciting. I think that most venture funds in the future are going to operate this way. I think that private equity will be impacted, and as I said, real estate. Now on the fund side, I think it's ideally suited because funds are kind of a one and done. One of the problems that an early stage company has in going public is that if the company falls out of favor with its investors, there's some challenges because they may need to raise additional capital. So I think that funds are ideally suited for this, but I think it's going to happen with companies as well. In some cases, it's protocol tokens that are going to, be use tokens that work. But in some cases, I think you'll be able to sell a security. My view is in the future that these late stage sort of venture, whether it be Series B, C, D, E, F, these things will go away because the blockchain is enabling companies to essentially go public globally at a much earlier stage. So I think that there's still a role for VCs or small VCs to be playing in pre-seed, seeds, or even Series A. I don't think that in most cases, companies raising capital on a white paper is adequate. I think as investors, we need to hold these businesses accountable and probably set a higher bar. But once you've gotten past a proof of concept, once you've got a prototype, once you've got anything that says you've got something that works, I think you can go public essentially at a Series A or Series B level. So that's that.
So I think a common theme that we see with tokens, and I think it's coming up again with VC and equity and these various different assets, is this democratizing factor. So all of a sudden, we are allowed to venture into this world, and it's a very new frontier. And as Matt and our lawyers will definitely always make us say, it has to be done with complete accordance with the law, and you have to follow the compliance. There's no ifs, ands, or buts about it. You have to make the efforts to do these things, and it's a big job. And there's just a significant amount of work to making that happen. And I think as we see these tokens slowly democratize everything, and I don't just want to talk about these assets too. Tokens can be used for so many things that aren't these kinds of things. We have to think about tokens as, when you go to Starbucks and use Starbucks points, those are tokens. They're tokens on Starbucks system right now. I use them all the time, and I get points for them. That's a perfect example of tokens being used within this system. And I know it seems crazy because it's just Starbucks, and it's just tokens. But when you interoperate those tokens on a system where they can play around with all of these other financial assets and all of these other mechanisms, you get a system that we now have access to that changes everything. It changes the way we interact from a business perspective and a way we interact as citizens with each other. So I'm just wondering, saying that, the democratization aspect, what are you guys feeling right now on that subject? What do you see on the ground, things changing, slowly moving over to this direction? And I think we'll start with you, Jalek, because you're nodding your head.
Sure. Yeah. I mean, I think about we're living in a really speculative market right now with the cryptocurrencies, and I just saw right before I came on stage, the market value of the cryptos just exceeded Netflix's market caps. So, and of course, this reminds me. I mean, I've been through two kind of bubbles and crashes in my venture career. One was in the '99 to '03 timeframe, and the other was post 2008. And but as we saw with the internet, we're going to see some real value being created out of the experimentation that's happening right now. I mean, what I'm really excited about is this idea of securitizing assets that haven't been able to be securitized in a very micro way. But what's different than the 2008 period is the amount of radical transparency that's going to come with that securitization. I think the interoperability and kind of redefining what currency is when you're talking about being able to use loyalty points and even like my health records if I choose to, or deciding what I want to use as currency and making sure that that currency is kept in a secure way, and then like layering on all these potential contracts, smart contracts on top of it. It's going to be a long time before we get there, But the world's going to look radically different when we get there.
A tokenized world. It's crazy. Yeah.
Can I start my comment by asking a question to the audience? How many of you do not own a token of some sort? Do not own a token.
Wow.
So about a third. A third. That's not bad. So
Change that before the end of the day, please.
So here's an opportunity to
That
go
is
and
not financial advice. Yeah.
support. So here's why I'm asking, because what we are seeing, you asked about what's changing, what's evolving. We're seeing the first signs of what I call the circular economy, meaning that there is a new economy of sorts that is being created because there is an earning and a spending that is happening inside a new closed system. And we're seeing this in these new offerings that are being kind of coming on the market, and they are being bought so quickly. And 3/4 of the money going into new tokens is money that was earned from previous token appreciation.
It's going into
So this is
itself,
really
yeah.
the internal circular economy that's going on. And we saw this now, we're seeing in first signs is in those new tokens. But it's going to spread into other things because most of these are very new yet, and we can't really spend as much as we can earn. And that's kind of the next exciting thing that's going to happen is to seeing all these transactions start to take place within this new crypto economy or blockchain economy that is new.
Yeah, Joel, from the analytics side. Yeah.
So I agree that we are living in a period of time where it's highly speculative, and that's actually following the same pattern that technological revolutions sort of their relationship with financial capital. Every time there's a new technology that emerges, you get a period of time where it's mostly financial speculative value that's driving growth as opposed to actual usage value. And that drives up a very big bubble that ends up in a crash. And then it's after the crash that you get growth that is led by actual production value and actual utility value. So when we think about tokens and their applications, you're completely correct that it's not just tokens in a blockchain service or a protocol. It's a broad range of applications from there all the way to the loyalty points in Starbucks. But I think there's a question about when those use cases are going to emerge, and what are the actual use cases we're going to see during this sort of period of frenzy, which will last an unknown period of time. So when we look at tokens, I like to focus on the ones that will gather the most immediate utility or the most immediate usage, and right now it seems like broad use applications like currencies or like developer platforms are the ones that are actually gaining a lot of usage, and those are likely the ones that are going to survive that big crash after the big bubble. And then I think is when we get into the more vertical and more specialized applications like the loyalty points and everything else.
So on the democratization side and kind of what's in store for the future, it's probably worth noting, what happened and why now. So I was a founding board member at Mastercoin, which was the first ICO designed in the spring of 2013, launched in the summer of 2013. And this is a model that's been around through then, 2014, 2015. So why now? What happened in, call it 2016? You had venture capital coming into the industry, increasing rapidly from 2014, 2015. But in 2016, it went flat. But the amount of entrepreneurs voting with their feet and coming into this industry was continuing to increase, including the quality of them. And so the entrepreneurs, being the tenacious, persistent types that you need to be successful, said, well, just because the VCs, the generalist VCs, are not increasing their investment because they're not seeing the exits, they're not seeing the revenue, let's go raise money from within our industry, people that actually understand this better. So that's kind of what drove this and why it's happening now, and I think it's really exciting, and the implications are. But everything today is endemic, which is what you'd expect. Naturally, people from within the industry are raising money for their products to support the industry in some way, but I think that's all about to start to change, as was mentioned. You're going to start to see non-blockchain related things coming out to raise money from within our community. I think the first of those things are going to be things where on a Venn diagram you've got some overlap, whether it be things that are video gaming or interesting sort of tech-related stuff, in the same way that, Kickstarter or stuff that has big recognizable potential of consumer brand. I think that's the one piece. And I'm also excited about sort of intentional communities. For decades, there's been interesting people coming together talking about alternative systems, that might not even be systems built on scarcity but abundance, where you already have a built-in community that cares about something, whether it could be a town raising money for new farming equipment that's shared essentially by that town, or an intentional community buying a piece of land, and that group of people all owning essentially a piece of that land, and that land becoming, those fractions or digital things running on our infrastructure, then can essentially be used as a currency within those communities. And so I think those are the things that are very exciting. Bank Core in particular is focused on that. If you haven't been following, I recommend you do. But eventually, yes, everything ends up on this stuff. I sometimes have a pair of chronicled shoes on. If you're not familiar with this, it's you can have an NFC chip or an RFID chip where you have a certificate of authenticity or title that exists on the blockchain. If I want to transfer those shoes, I'm going to transfer that title. And so every asset is eventually going to end up here. And the thing that I would think about as investors is market timing. A lot of ideas might be right. The question is, where are they in the cycle? Is this an idea that's ripe for today, or is this something 5 years from now?
But I also think we're going to see a vastly different development cycle in terms of market adoption than what we've seen before, because this is grassroots. A lot of these applications are going to be created by people on the ground who want to be able to fund, something in their community, and actually I announced the launch of the Future Perfect Labs, which is meant to be a space for people across disciplines to be able to come together and start working on these projects, because some of the best ideas for some of these tokens are ones that I've heard outside of the industry.
And I also just want to say as well, I am far more of an engineer than I am anything else. And these are not engineers. It's the other side of the coin. And I think the interesting thing here is that when I was asked to do this panel, all I want to talk about is the mechanics and the interesting developments technically, and what we can do and what's possible. And oftentimes, seeing it from another perspective is so important, and seeing, how you guys look at it on a daily basis. It's totally different from me, because for me, it's lines of code in contracts, And as well, I totally forgot to introduce my own projects, which I definitely should do, because what the hell. So I'm working on 2 projects for Consensus. I've been working on them for a very long time. They're slowly coming to beautiful fruition, but it's taking forever. Wayfund and Boardroom, Wayfund being a crowdfunding platform that does deal with tokens and crowdfunding on Ethereum, and we want to make the process as easy as we can for anyone doing raises on Ethereum. And then Boardroom, which is a governance system that's unified and generic in the way that we'll be able to operate many different kinds of governance with many different kinds of services, and have a system that not only we can use to help democratize our world a little more, hopefully get you guys into tokens in a way that's beneficial to everyone and the community and your communities. But I think also doing sales like, which I'm not sure if they announced yet, but we're helping in a sale for a movie, and that is a revenue token, and one of first of its kind almost, I think that we know of, and it's to help the arts, to help the arts diversify into this space and actually gain from this momentum that the whole space has. So I just want to say that bit, just because I really should, while I'm here. Now, I think we have 1:30 left. I wanted to do closing statements, but I don't know if we should just take 2 or 3 pressing questions from the audience, and I will run out and give you the mic, but you have to also run to me, because we have 1:16. So.
Go.
The greatest questions. What are you thinking? Okay, I'll take you, and then anyone else? You got a question? Okay, so you, and then we'll see what everyone says.
When do you think ICO will be regulated? Regulation.
Well, I mean, they're already regulated. The question is, are you passing the Howey test or not? And make sure that you're legally advised in this space. The implications of screwing that up can be, I know orange is the new black and all. Most of us probably are not big fans of the color. I don't see lots of people in orange. So make sure that you're well advised, and you need to look at this closely. Is the most important thing. And the question is, what new regulations will emerge? The regulatory arm is, it looks backwards. It's not, the SEC and various groups that are going to look at this are going to take a year or 2, and it's when the projects eventually fail and you lose money from non-accredited investors that you're going to be scrutinized.
This is my first more than 3-minute exposure to blockchain, so please forgive me if this reflects my ignorance on the topic. But I think it's a very fundamental question in terms to help me understand. So let's suppose, for example, that your sneakers were protected by blockchain. For example, that is that there was a chip in your sneaker, and there was some link to a block that revealed that you were in fact the owner. Would the sneaker company that arranged for that token be able to spend any less than the full value of your sneaker in computing power to generate that block? And if they didn't, could I not then say, let's say your sneakers are worth $500 and they only spent $100 to generate that block in computing power. Could I not steal your sneaker by spending $101 in computing power, prove that I'm the owner, and go and take your sneakers from you? And if that is not the case, then, in other words, if they have a way of protecting it besides the value of computing power they invest in creating that block, then is it really a token, or is it just some password-protected database of the company?
Yeah, well, this is one of the things that you think about when you want to build your token. The question is, are you going to try and build your own blockchain, or are you going to build it, on top of an existing sort of rail like Ethereum, where you don't necessarily need to be mining new blocks? I mean, you're building an ERC token that sits on top of, Ethereum's blockchain. And I would imagine in most cases, unless you're trying to build something at the foundational layer, you're going to be building it on top of whether it be rootstock, ERC20. You could do it on top of Omni, and there are multiple options there. And I think that's what most people in the case of sneakers would do.
The tech is certainly there, but it's just for that particular application. It's not the lowest hanging fruit to go after, so it's not going to be going after first. There's other things, more pressing things to be done. Now, unfortunately, we're out of time. Thank you so much. I think it worked out. Yeah. Woo! All right. Great. I think that's it. Yeah. Okay. Cool.